Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. We have another weekly watch list video for you guys here today, and I just hope that everybody's having a great and safe weekend. Coronavirus here in the Northeast where I am is pretty bad right now. You have Delta, you have Omicron, you have the regular flu on top of all the seasonal colds going on. And I have two young kids in school. It's just really, really tough right now in New York. The amount of cases per week, per day, I mean, it's doubling. It's just crazy, crazy. And if you want to get tested, it takes, hours waiting online. So, you know, it is definitely going to be affecting the economy, at least in the short term, because I already know so many people and so many things and events that have been canceled. People are not going out, and they're in quarantine. Some people that have gotten it, so they can't really do much. So, in the short term, this is definitely going to affect the economy in the US. It is definitely affecting the economy in New York. There's no question about that. Restaurants are going to be hurting a little bit. Other businesses where you go and there's a lot of people are just going to be cautious. And if you do have, you know, 20,000, 30,000, I think, cases in New York just reported the last day or so, that's 30,000 people that are, like I said, in quarantine. Their families are. So you're just taking a lot of people out of the economy every day. And yeah, they'll be online. So we'll see how that does. But, this is just what we're looking at. It is what it is. So coronavirus out of the way. Just know that it has a short-term impact. Who knows what's going to happen? But you have Biden talking on Tuesday. He's going to address the nation. Let's see what he says. Each state is going to be different. I'm in a state where they're really, really strict, in New York. So what he says on a federal, who knows what they're going to do. I think he's waiting for more data to come in, but we'll see. So last week, the Fed announced that they're going to be raising interest rates, possibly 3 times. They're doubling the amount that they're going to taper. So they're going to be done in March. And, the last time the Fed raised interest rates, the stock market did not like it at all. And I'm going to get into the charts here so we can look at a long-term. I like to look at the market from a very big, picture. And then we kind of go in and look at it in a smaller area. That's just the way that it works for me. I like to see past patterns, where we came from, what indicators are being respected the most on the daily chart, things that I can use to come up with my thesis going forward. And that's what these videos are all about. It does take a lot of research, a lot of studying, the market in general, and just the financial markets, the economy. This just takes a lot of reading, a lot of studying, a lot of technical analysis in the charts. So like I said, the last time the Fed raised rates, Trump hated it. There was a battle between Trump and Powell. He was saying they shouldn't be raising rates, and then the market just went down 20%. So huge correction in the market. The last time in 2018 this happened. We'll see what happens here. The market definitely is very, very tricky right now. There is zero question that this is a very tough market to trade, especially the last couple weeks. So don't think that you have to trade, okay? If the market is really nuts and just really tough to figure out, we like to say choppy, just sit out, watch it, wait for that reversal to start. And then when things settle down and the VIX isn't going all over the place, that might be a decent time to start preparing for 2022, what stocks you want to buy. It's going to be a stock picker's market in my mind. So let's go into it. Let's take a look at what we have here for the week. These are the earnings reports that we're going to see this week. Keep in mind, the market will be closed on Friday. All right, Bitcoin hovering around the 47,000. It's still, making lower lows, lower highs, but it is looking like it wants to base out a bit. And this is the last month. As you can see, lower highs, lower lows. The lower lows here are starting to get, not drastically lower. And it does look like it wants to start to base out here. And, being down 20% in a month, usually this is where Bitcoin has seen some buying or at least seen some stabilization. So we'll have to keep an eye on Bitcoin. If you loved it at 67,000, why don't you love it at 47,000? Bonds, this is what they're yielding, the 10-year, all very low. This is all very low. There is just no reason to be buying bonds right now. People don't want them because if they think inflation is going to be high, there's no point in owning a fixed income type of investment because it just will not be worth it. So this is the economic calendar for the week, Monday, Tuesday, and Wednesday. Not much going on here. And then on Thursday and Friday. Friday closed. Thursday, a lot of economic data to be aware of. Core inflation, we'll just keep an eye on this type of stuff. The Fed already kind of made up their mind what they're going to do, which is kind of good that they're going to raise rates because, inflation is getting a little out of control. So, or has gotten out of control. So they definitely needed to do something. Now, this is our Discord. It is a great group. Very good traders in here. A lot of good information. And it's nice to trade with other people. Trading is kind of a lonely thing. Now, if you could join a group like this and, you pick up certain things that some of the successful traders are doing, add that to your arsenal. And you can also ask a lot of questions in here. So this is only $99. It's one payment and you're in for a lifetime subscription. That's it. No monthly payment. So the link will be in the description for that if you are interested. And let's get into the charts. So this is the S&P 500. I got to take a sip of coffee here. Going to need that energy. So the S&P 500 here. Very clear uptrend. In my mind, even though we have seen the market kind of, rebalancing going on, a lot of rotation going on, we are still in a clear uptrend. Now, did we see sort of a double top here and a very clear level that we cannot seem to get through? Yes, that's 100% going on. Now, when I've made previous weekly watch list videos, we try to do the best at predicting where the market is going by looking back here at the daily chart to see if there's some kind of patterns we can notice, some technicals, some key levels, the 50-day moving average. These are all really good indicators where we've seen previous bounces before. This is the 50 moving average, this kind of cream colored line here. Every time we've come down to it, we've bounced, except for this correction here. We called the bottom and then started to make new all-time highs. And that's where we saw this trouble here for the better part of a month and a half. We could not seem to get through this. Now, we did get there very quickly. So when we did this, that's where, in our group, in our community, Green Bar Trading, we were saying way too quick, way too fast. And there was just no buying anymore at this point. The market just did not have any more buyers. And then we started to roll over. Now, 4,500 is going to be a clear level that we're going to want to see hold up if the 50 moving average does not hold it up here. 4,600 is also a very clear level. You can see, let's just zoom in. These last couple trading days, 4,600 has held up. So if 4,600 breaks, then you got to think the next area down where we're going to want to see support is going to be 4,500. If 4,500 ever broke, you're looking at probably a big correction on your hands. So right now, I mean, who knows how much volume is going to be this week, but 4,600 and then 4,500, you're going to want to really see hold. And the longer it holds up here, and you do have 3 touches here on this trend line. So the way it's kind of setting up is for that flat top breakout eventually of the stock market. As long as these things can hold up. Now, this just adds another layer of if the 50 breaks, let's say this week or next week or whenever, then I would be looking at this trend line. This trend line that goes back to September. Let's see if that can hold. So these things, this is technical analysis. Nobody out there, I don't care who you listen to, who you watch, they do not know where the stock market's going. I don't know where the stock market's going. I could just give us and our community a better probability of where the market is going. That's all we can do here. So, and that's what we're doing. We based out here. We saw new all-time highs. We're basing out here. Let's see what happens. I mean, this is definitely a respected trend line here. And we have a very, very obvious resistance level. So that's the S&P 500. Going to the Nasdaq, same thing, 400 here. I mean, almost impossible to break out of. Even after the Fed's announcement, we saw a huge rip up, a lot of shorts covering, and then just tanked. And then on Friday, held up pretty good. Friday held up decent because that could have just kept going after a huge rejection like that. The Qs are still holding higher lows. So that's encouraging that it's still holding up here. Anything is possible going into this week, but this is a trend line for the year, ascending trend line here that, you can see a possible bounce on. Just try to keep this in mind. I did want to show you guys the last time the Fed raised rates back in 2018. So this is coronavirus and a beautiful rebound. I mean, we're going to be seeing a chart like this for a long time. It's like the Nike swoosh. Right here was the last time that the Fed came out and said that they're going to be raising interest rates. And the stock market had, if I'm not mistaken, from the bottom to the top, a 20% correction. Right here, just about a 20% correction. We have not seen a correction like this since, if you call, obviously this was a correction, but it was because of, the uncertainty of coronavirus. This is a normal correction if in a bull market. Now, it could have went into a bear market, but got bought up pretty much immediately, all the way up to, right before coronavirus. But, the Fed does have a very big impact on the market. The Fed impact on the market this past year and a half has been nothing but, giving everybody money and stimulus and asset purchases, just pumping the market up to all-time highs. Once that gets pulled back, which is what's happening, then you have to be asking yourself, well, are we at a market top right now? If the Fed is going to be pulling back all the support they've given the market here, there is a good case for a bigger correction, 100%. But I'm just looking at it until some of these levels break, I have to stay bullish because of what has gone on the entire year. The whole year, all we've seen is the dip being bought up. I don't think this is encouraging, but we will see. So that's the Qs, that's the S&P 500. And now that we went into that, a couple of little things here that I read over the weekend. Let's see. I got my notebook here. The average stock is down 28% from its highs. The average stock is down 28% from its highs. The rotation that we're talking about and the revaluation of some of these stocks and their earnings and their price to sales after the Fed started to say that they were going to be raising rates has definitely been going on for probably a month and a half. So that is into the market right now. I mean, already in was the rate hikes. And the average stock being down 28% from its highs is pretty interesting. So also, the S&P 500 is expecting 9% earnings growth in 2022 compared to a 10-year average of about 5%. So they're still expecting companies to earn good money. So earnings will, possibly keep the stock market up, but we're going to have to see where that rebalancing, where the revaluation of stocks starts to base out. And that's what we're going to have to see as we see this rotation continue to happen from the high growth, the no earnings type of stocks are definitely being sold off and have been sold off. So now getting into some of the stocks and ETFs that I have added to my watch list, let's start with the financial one. Is it going to make you a ton of money? No, but it is in this channel here. Having trouble at the 50 moving average once it broke down, but you have to think that financials will do better with raising rates. They'll be able to make more money. They'll be able to make a higher profit margin. Now let's take a look at XLV. This is the healthcare ETF. This is looking really good. This is the daily chart for the year. The XLV is all the healthcare stocks, and healthcare and energy seem to do the best when inflation is expected to be higher. A lot of people like to put these in as defensive type of names, and healthcare and energy, they seem to definitely hold up better. This has a clear breakout at the 137 level. It looks like it came back down, retested that level. It's a little extended. The RSI is definitely hot here, but this is definitely something to keep on your watch. This is a very bullish looking chart, as the rest of the market you can see is looking the opposite. This could be something that you should definitely be keeping an eye on. I'm not telling anyone to buy anything, but this is on my watch list. And then XLE, which is the energy ETF, is also on my watch list. Look at where this was trading before coronavirus. We're not even there yet. So once again, this is definitely setting up higher highs and higher lows the whole year, but choppy, right? Very choppy. So energy, oil, natural gas, all this type of stuff, environmental impact, It definitely could be a choppy ride, but it looks like it's setting up a nice level of support here. So I'm just going to mark this out about 54-ish, 53 or so. It seems to be seeing some support. It has bounced at the 200 moving average. Keep in mind that's around 52. But do we want to be buying up here, or do we want to be buying over here for that next ride up to higher highs, which would be in the 60s at some point? That's the way I like to trade. I like to buy good discounts, good deals. So this is going to be on my watch list. Another one, NVIDIA, a day trader's, best friend this stock has been, but has gotten super choppy since, that rebalancing that we've been talking about. The stock's been up like crazy. It's just, huge valuation. They are going to be so important in the future. They already are. But I'm not really worried about that too much. I want to look at this more as a swing trade to see if maybe we can take advantage of a lower price and get back to those highs. So getting back to those highs from here, I mean, that's 25% off its all-time high. I'm sure people loved it when it was ripping up here and then it pulls back. Nobody likes it anymore. That's when I start to like things. When nobody else likes them, and then you get in for that next leg higher. But it does have to hold here. It's at the 50 moving average. This is a 50 moving average bounce. That's this type of trade that I would be looking for a short term. And AMD is the exact same way. You have a 50 moving average holding it up here. Maybe some traders will take this trade. We'll see what happens. But every time it's pulled back in the past, it has ripped up. It goes up, comes back down, goes up, comes back down. And this is a very nice looking bounce here off the 50. So AMD is going to be on my watch list. This has a lot of room to go. Once again, the overall market, it plays a huge part. Facebook, this is one that I had, in my mind, a short bias because we're making lower highs, right? Very clear, since the all-time highs, we're making lower highs, but we're also making lower lows. So are we at the top here for a short back down to 300? We're going to have to wait and see. The overall market, everything else plays into this. It did get above the 50 and above the 200. It has done that before and come back down, which we can see here. But we're going to have to see how the overall market holds up. If you do want to trade Facebook long, have this on your charts. You're going to want to see this resistance broken. And then you'll be probably setting up for, higher highs to start. But right now you're still making those lower highs, lower lows. You're downtrending very clearly here. So just be aware of that. And this stock right here absolutely destroyed me last week. This is such a cheap stock right now. If I didn't have such a bad experience with this last week, this bounce off the 200, I mean, at this point here, the PE was probably at about 4 or 5. That is ridiculously cheap for a stock that's making this much money. So, maybe I dip my toes back into this. It did break this trend line, which I hate when these do that, but eventually they have to. It's not just going to keep going up in a straight line. We'll see if the 200 is going to start to mean something here. And then you have overhead resistance. So you're going to have the 50, you're going to have the 20, you're going to have this ascending trend line. But do I think that this was way oversold after beautiful earnings and raised guidance? Yes. I think a lot of people that bought here just had to sell, which was me included. And that caused the drastic move, way oversold. So ASO is still going to be on my watch list, believe it or not. So yeah, I guess that's it, guys. Sorry for the long video. There is just so much information to get out to you. Hit the thumbs up for the video, and I'll see you back on the next one. Take care.